Hi, and welcome back to the WHVP podcast. In this episode of the podcast, the WHVP team sits down to discuss the reasons for, the options of, and the structures of asset protection. Before we jump into this, the WHVP team talks about their excitement of the U.S. opening its border to European citizens, and our trips of WHVP to the U.S. in November and December. We also quickly talk about the Pandora Papers. Let's get into it. Alright, so good morning everyone.
Good morning.
Happy to be alongside of you. For our listeners, I'm Jess Roberson. I'm joined with two of our managing partners, Jamie Vrijhof-Droese and Urs Vrijhof-Droese. So we're going to start our podcast off talking about the recent development of the United States opening up its borders to European travelers, finally.
Yes, we have been waiting for that for a long time. We're very excited to announce we'll be coming to the US. We will have our first trip in November. Urs and I will fly into Miami. Urs will stay there a little bit longer. I will just be there for one day. I will continue my journey to Chicago and then New York. And Urs, maybe you can also share a bit about your plans.
Yes, I will arrive in Miami on November 20th and will stay there until November 25th, like Thanksgiving. And then I will fly over to Los Angeles and spend another 6 days there before I'm heading back to Zurich.
Awesome.
Yes, I think, Jess, you also have a trip planned, right?
Yeah, so I'll be in the Midwest area of Colorado for about 4 days in December, from December 13th until December the 17th, 18th. Setting up meetings. I'll be along the Front Range in Colorado, so Fort Collins, Denver, Colorado Springs, Pueblo areas. So I'm excited about that.
Yeah, I think we're all very excited.
Yes.
Our last trip to the US was in January of 2020, when the world looked quite different. And if you would like to meet with any one of us, if you're in one of the cities that we just mentioned, if you have time in November and December, just shoot us a quick email. Easiest to get in touch is info@whvp.ch. We're very happy to arrange for our meeting, lunch, dinner, whatever best suits you and your schedule. Just let us know. And we're very excited to see all our American friends again, our clients, business partners, prospects. So will be an exciting end of the year, I think.
Yep, and I'll give you those details with that email address again at the end of this podcast, so that you don't miss out, so you don't have to come looking for it. So you can just jump to the end if you're so eager to meet us. Yeah, so it's exciting. The other big news that almost threw us not into a loop, but something that was brought to our attention was these Pandora Papers that just came out with a lot of people's assets being exposed for good or bad reasons. Do you guys have any thoughts on that? Do you guys keep up with that at all?
Yeah, a little bit. It's interesting how similar it is to the Panama Papers a couple of years ago, but on the other hand, it's not that much of an issue anymore. I think the people are much more aware of what is going on in the world, and even if there are more regulation, stuff like this will happen all the time. But also it is important to acknowledge that these kind of structures are not illegitimate perceived, but that they can be a justifiable and good structure to protect your wealth and to structure your wealth and to plan your family structure and your wealth structure overall.
Yeah, and I think that's a big issue of a lot of the big talk around is the illegality of some of these things that were going on. However, when you look at people trying to structure their wealth and diversify or protect assets, there's many different ways that you can go with that are legitimate, legal, set up for the individual to protect themselves and their assets, for their families, for their futures, for their retirements, as well for their heirs and what's going to come on. So with that, we're going to jump into our subject today, which is asset protection. So I'm going to quickly just talk about a little bit of why asset protection might be needed. So there's a few reasons that might be needed. One of the reasons is the risk of incapacity. If you happen to get in a car accident, or if a person can't manage mentally the business or even your assets anymore, there needs to be something in place so that money just isn't lost, or it gets out of control, or is unwatched. It's kind of like a garden. If you leave a garden untouched, weeds grow, things happen, and your plants don't grow the way that they should, and they become open to risk. So just, there's certain things that you can set up beforehand. Talking with, obviously, lawyers. We're not lawyers here. We're talking from the outside. But speaking with legal representatives to figure out who's going to manage your assets in that possibility to mitigate against that risk. Another risk is the risk of business losses. There's various forms of entities that a business can be set up in, whether that's a sole proprietorship or a partnership. And so a way that someone can protect their personal assets, if they're a business owner, is making sure to incorporate or set up an LLC company. This allows the individual for the company to be seen as an individual and the person to be seen as a separate individual, so that in case anything goes bad with the business, whether it's a frivolous lawsuit or a lawsuit or just business losses, the person's private wealth should be protected as long as they were following all the rules, all the laws. It's very clear that it's very set out, very clear what you have to do to ensure that your personal assets are protected in that case. Another risk is if you go into a nursing home. Nursing homes in the U.S. cost around $100,000 a year, if not more. It's very expensive, and many insurances, because of this expense, will not pay for those expenses. So it's important to really plan for this eventuality that could happen. It may not, but it's good to have something set up in place. Maybe that's setting up a trust that's just going to be designated just to pay for that, and so that's an option that is available to look at. Another risk is losses due to estate tax. So in 2016, the United States, for U.S. clients, came out with a estate tax law. When you're inheriting, so not you yourself, but when your heirs get the money, and if that value is over $5.45 million, there's going to be a much higher tax on it as opposed if it's under that. So making sure there's enough cash, if there is more than that amount of money going to be handed down to your heirs, do you have enough cash? Will your heirs have enough cash to actually pay that tax? And I think that's a big issue to think about. If the money is tied up in hard assets that are not very liquid, it could become challenging to pay those taxes. So making sure you have something set up in place, that you're talking to a CPA, figuring out how that's going to be possible and how you can best set that up. Again, go to lawyers, go to tax professionals, and see what your individual situation is. That's the last risk is presented by your heirs. Life's difficult. Sometimes people get divorces, and it can be financially detrimental to your heir if they had been able to inherit something. However, then they lose half of it immediately or whatever. So again, make sure you're going to your lawyers and looking to set up trusts that will specifically provide for your heirs or who you want to get your money or your inheritance. There's various types of trust that can be looked at in that situation. So those are just some of the risks in asset protection that people need to be aware of and think about and talk with their legal representatives and tax specialists on that.
Well, thanks. It was quite a comprehensive overview. I think you have already touched upon a variety of very important topics. Just make the bridge back again to the news that we discussed in the beginning. I think I also want to reiterate that it really, asset protection, especially for an American, is a topic that affects many, if not most people, and it's not just if you have something to hide or if you're super wealthy. So I think in a first step, it really makes a lot of sense to work through the myth and the bad reputation that section of business gets, because really in 99.9% of the cases, it is a legitimate way of securing your future and securing your family's wealth. So don't get put off by what you're reading in the news. Really make sure that you have a good and comprehensive overview over the risks that you're facing, that you're potentially facing, and make sure that you get the help that you need by, as Jess mentioned already, by professionals, lawyers, asset protection attorneys. And if you don't know anyone, we have a very good network of people who offer complementary services to the wealth management services that we offer. So while we don't do that ourselves, we're happy to point you to the right direction in case you don't have any contacts yet. Having said all of that, also another point I want to make is I think a lot of people are not necessarily aware of how high the risk of a lawsuit is in the US, whether it's legitimate or illegitimate. I think it's one of the highest, the nations with one of the highest number of lawsuits in the world. I think it's about 15 million a year, so that comes down to 1 in 12 adults a year that are being sued. So the chance in general is already pretty high, and then if you have a high exposure job like attorney, doctor, if you're a business owner, if you have your own house, real estate, that automatically puts you in an even higher risk than that of the general population, which I just mentioned. Now, there are a variety of different options and layers, and depending on your personal situation, there's easier, complexer, cheaper, more expensive ways, like with everything in life. It really depends on your personal situation. I think the easiest layer of asset protection and the one that is most commonly used would be insurance. And I think that's something where we don't really have to say a lot about it. I think that's pretty common sense, that you insure your car and whatever valuables you have. So that would really be the basic level of asset protection, where you protect something against an accident or theft or whatever. Then the second layer, I would say, is something that a lot of people don't really spend a lot of time thinking about, and that would be state and federal law. So depending on which state you're living in, different things are safer or less safe. With some states, like the home you're living in is safe. With other states, your retirement money is safe. And there it really just makes sense to work with someone who knows your local laws and knows how you can best set up your wealth in a way that it plays into the laws that are set up in your area. Depending on your situation, it might even make sense to move to a different state or whatever location in the US might be better suited for you. And then something that Jess already spoke about, the third level is what I would call estate planning, where we talk about setting up power of attorneys, where we talk about having a will in place, having the people who inherit your money being informed about your wishes, just having all the paperwork ready, that if you are, for whatever reason, unable to make decisions, if you pass away, if you get hurt in any kind of way, that the people who are in your life know what to do, and more importantly also have the legal basis to do whatever they're supposed to do. And I think Urs will talk about that a little more later on, how we, with the money that we're managing, try to assist our clients and account holder to best set that up in a way that it will hold out and work for the future clients. Then also already mentioned by Jess is asset protection when it comes to business entities. So there's LLCs, there's whatever kind of different ways that you can structure your business to make sure that your assets are more safe. I think there certainly makes a lot of sense to spend quite a bit of time thinking about that as well. And now to the highest level of asset protection, that's what we have, I would say, what we see most in our daily life are domestic trusts and offshore trusts. So domestic trust is a trust that is set up from within the US, that has a trustee in the US. There are different areas that are better equipped for those kinds of protections. For example, South Dakota is a very well-known place, but there's others as well. And then what's important to note is even if you have a domestic trust, you can, within those trust structures, you can have an offshore bank account. So you can combine that, and then vice versa, you can have an offshore an offshore trust, which can be in a location like St. Kitts and Nevis or wherever else in the world, and then you could still have that trust with a domestic bank account, or you could additionally to the offshore trust also have an offshore bank account. And I think the offshore trust with the offshore bank account is certainly the highest level of security that you can get. It is also I would say the most complex to set up and probably also the most expensive one. And it just really depends. It comes down again to your exposure to risk, to your wealth, to what you're trying to accomplish. And I know we're repeating ourselves, but it is important that you just are aware of your situation, your wealth, your risk, and what you're trying to accomplish. And with this information, then talk to a professional that can help you set up the right structure that is beneficial for you and your family. And I think Urs can now maybe talk a little bit about where we come into place and how wealth management can play a part in that.
Yes, thank you. It might be quite challenging to following all the possibilities you have, offshore trust, offshore account, and whatsoever. I think when setting up this structure, it also is important to thinking about who you partner up with after everything is in place. So you should have someone who is managing your wealth, and you should have, depending on the size of your wealth, maybe several people managing your wealth, because another layer of asset protection or asset planning or wealth planning is to take the opportunity of different perspectives. So if you have one asset manager sitting in Switzerland has a Swiss perspective, a European perspective when it comes to investments, and then another investment advisor in the US who is doing his job there, you have the opportunity or the possibility to lower your overall volatility, because maybe in 1 year your asset manager in Switzerland doesn't do that well, but your asset manager in the US does, and in the other year it's the other way around. And on top of that, when you go into other jurisdictions, you also have different systems that can give you another security, because if there is, for example, a lawsuit and this lawsuit should be executed, it might be that, for example, the courts in Switzerland, they do not accept the lawsuit because it might be a fraudulent lawsuit or whatever, and then on top of that, it is much more difficult to get to the assets after all, because you have to take the verdict, going to Switzerland, going to the court, say, look, here it is, I want to execute that, I want to have that money, and then the court has to look through that and have to decide whether it's legitimate or not. And I think that there are different reasons why it makes sense to bring the international diversification with different jurisdictions, different regions into place as well.
Yeah, I think that's a really good point. You know, we in finance, especially in investing, we talk a lot about diversification. It's something here that, you know, is part of our heartbeat.
Yes.
However, the diversification is something that can be spread out into the structure as well. As you had mentioned in yours about having an asset manager in the States, asset manager in Switzerland, you've then essentially taken away home bias by adding home bias into your asset manager. So the home bias that exists in your American asset manager is canceled out by the home bias that your European asset manager has. And so there's I think some huge importance to that issue as we look at it, is getting people to manage your wealth, if that's the option that you choose, is exactly how do I lower my risk, how do I lower the volatility based on who I'm working with.
Yes.
Yeah, and I think one thing that we haven't mentioned yet, and that's also very important, is the earlier you start, the better. So you don't need to have a huge amount of net worth already. You can also start small and then build when your net worth grows, when you get older, when your family grows. So I think it really is a topic that you should start early on, and that you should put in place in a way that makes sense, and then you can always make it bigger and better. But it's not something that I would put off, because it's really, if something goes wrong, it can go very bad very quickly. Mm-hmm. So I think it is worth taking a little bit of time and a little bit of money to set in place a structure that that just puts some protection on your family and your wealth, and then take it from there.
Mm-hmm. Yeah, and there as well, I think it gives you the opportunity to broaden your horizon. If you start early, you get in touch with this whole financial system, what are the opportunities, and then you can tip your toe into that area. And if your wealth grows, as Jamie said, you feel more comfortable and can really benefit out of all these opportunities. We have many people, they contact us when they come into retirement age, and then they have to figure everything out, and it might be a little bit stressful because retirement is something which is new to you already, and then you have a new structure taking in, or being in place, and everything of that could be a stressful situation. But if you have something already set up with 40 years or something like this, you already know what you're dealing with.
Yeah, and I think also you should partner up, especially if you're like in the international field, you should partner up with a wealth manager who also understands the risks associated with being a wealthy person in the US, because for us it's always a very strong focus on getting the people who will eventually inherit the money on board as early as possible. We want to build a connection with them as well, so that if something happens, if they have to take over, that they already know where to reach out to, that they feel comfortable with us as contact persons, because that makes it a lot easier for your loved ones as well in the case of something happening to you. If you have a financial partner who really puts an emphasis on getting the whole family and everyone that is somehow involved in a structure on board early on, I think that will make your life a lot easier down the road as well.
Yes.
Thanks again for joining us on this episode of the WHVP podcast. As mentioned in our podcast, if you would like to reach out and get in touch with us, please email us at info@whvp.ch. If you would like to follow us on any of our social media handles, on Instagram, Facebook, or YouTube, just search WHVP. If you'd like to read more about our company, check our website out at whvp.ch. Have a great week.